Hey everyone, and welcome back to Qualcomm Pulse, your ultimate source for the hottest tech and news updates. The world of innovation never sleeps, and this week is no exception. We've got a whirlwind of developments that are shaking things up, pushing boundaries, and sparking conversations across the globe. Get ready, because we're diving headfirst into the stories that matter, the ones that are redefining what's possible and what's next. From groundbreaking deals to shifts in market dynamics, you won't want to miss a single second of what's happening right now. So buckle up, stay sharp, and let's get into it. First up, we're tracking a significant development in the tech hardware space. A major player has just hit a new all-time low price, offering incredible value for anyone looking to upgrade their system. This isn't just a small dip, it's a substantial discount that could make a powerful processor more accessible than ever before. We'll break down exactly what this means for your next build and why this price point is such a game changer. Then, we're shifting gears to explore a fascinating and frankly unprecedented move in the business and political landscape. One of the most iconic companies in the country is now partly owned by the US government, a deal that's drawing comparisons from socialism to the art of the deal itself. This bold maneuver is sparking intense debate about the future of capitalism and government intervention in the private sector. We'll unpack the details and explore the potential ripple effects of this extraordinary development. Next, we're diving deep into the ongoing battle for dominance in the CPU market. New data is revealing a dramatic shift in market share, with one company reaching a near-historic high while another sees its lowest recorded share in years. We'll analyze the numbers, understand what's driving this change, and what it signifies for the future of processors in everything from gaming PCs to high-performance computing. Is this a temporary blip or a fundamental change in the landscape? And finally, we're circling back to that seismic governmental involvement in private enterprise, examining the broader implications of a president making direct, hands-on deals with major corporations. This isn't just about one company. It's about a potential new model of state capitalism emerging in the US. We'll explore the strategies, the motivations, and the critical questions surrounding this evolving approach to business and government. Stick around for all the insights, and don't forget to like, subscribe, and hit that notification bell so you never miss an update. Unprecedented savings on a powerful processor. For those on the hunt for a budget-friendly CPU, the market is brimming with options, but finding the best value can be a challenge. Manufacturers offer a wide array, making the choice between them a nuanced decision. However, a recent development might just simplify things for you. The latest Core Ultra 200 series, built on the new LGA 1851 platform, promises significant long-term value. And right now, there's a deal that makes getting onto this platform more appealing than ever. The Intel Core Ultra 5 225 is currently available at a remarkable 16% discount, translating to a saving of $39 off its original $246 price. This brings the processor down to a compelling $207, making it an even more attractive option, especially when paired with an affordable motherboard. This price point is reportedly the lowest the CPU has ever been, according to price tracking data, marking a significant opportunity for consumers looking for a capable and cost-effective upgrade. While Intel has faced some criticism and may not always top the CPU sales charts, with reviews often favoring AMD's X3D processors, their latest releases still offer excellent performance for the price. The Core Ultra 5 225, like its counterparts, is designed to handle demanding tasks, whether for gaming or creative workloads. Our own testing of similar processors in the 245K generation confirmed their solid performance, making them a viable choice for many users. The fact that this processor has reached its lowest price point since its release earlier this year is a strong indicator of its market positioning and the value it offers. This price drop ensures that consumers can get even more bang for their buck, making it an opportune moment to invest in this particular piece of hardware. It's a clear signal that Intel is aiming to capture a broader segment of the market with competitive pricing, especially on its newer platforms. But is this just about saving money, or is there a bigger story unfolding in the tech world? Stay tuned as we explore how government intervention is making waves in corporate America. Government takes a stake in tech giant, a new era for capitalism. In a series of moves that have sent ripples through the business world, President Trump has increasingly inserted the U.S. government directly into the operations of major American corporations. The most striking example is the U.S. government taking a significant ownership stake in Intel, one of the nation's most iconic technology companies. This action, which grants the U.S. government a 10% share, has ignited a fierce debate, drawing praise from progressive figures like Bernie Sanders and sharp criticism from conservatives who label it as a step towards socialism. This development is particularly noteworthy because it deviates sharply from traditional Republican and conservative ideologies that champion free market capitalism and limited government intervention. For decades, the U.S. has advocated for free market principles globally, often criticizing state-run capitalism. President Trump's approach, however, appears to flip this script entirely, raising fundamental questions about the future of American capitalism and the role of government in the economy. Business leaders are reportedly grappling with the implications, seeking to understand what this signifies for corporate America. The historical precedent for such direct government involvement in business is scarce, typically occurring only during times of severe economic crisis, such as the 2008 bailouts of investment banks and the automotive industry. In those instances, government intervention was deemed necessary to prevent catastrophic economic collapse. The current situation, however, involves a major, albeit strategically important, company like Intel, at a time not characterized by widespread economic distress. This pattern of intervention began earlier this year with the proposed sale of U.S. Steel. President Trump stipulated that he would only approve the deal if the U.S. obtained a golden share, granting the government specific governance powers, such as the ability to block factory closures or mandate investments. Following this, the Pentagon acquired a stake in a rare earths minerals company, another unprecedented move. Most recently, after the CEO of NVIDIA successfully lobbied to allow the sale of less advanced chips to China, the administration imposed a 15% revenue tax on those sales, a move described by some as a VIG or even extortion. The Intel deal itself stems from a report alleging ties between Intel's CEO, Lip Bhutan, and the Chinese military. This prompted President Trump to call for Tan's resignation. Intel, which had already secured billions in grants from the CHIPS Act to build advanced chip manufacturing facilities in the U.S., found itself in a precarious position. In a meeting with President Trump, the CEO reportedly agreed to give the U.S. government a 10% stake in the company, ostensibly in exchange for continued support and to resolve the controversy. This strategy reflects Trump's long-held belief that the U.S. government and taxpayers are often shortchanged by businesses and other countries. He advocates for a more tangible return on government investment, moving beyond indirect economic benefits to direct ownership and control. Critics worry that this state capitalist model, inspired by practices in countries like China and Russia, could lead to inefficiencies, stifle competition, and politicize business decisions, ultimately undermining the dynamism that has characterized the American economy. This dramatic shift in economic policy has certainly stirred up the political landscape. But how is the tech industry itself adapting to these new realities? Get ready as we dive into the latest market share battles shaping the future of processors. AMD's ascent, reshaping the CPU market landscape. For years, AMD processors have been a top contender, particularly in the gaming segment, and recent data confirms this trend is significantly impacting the broader CPU market. According to the August 2025 Steam hardware survey, AMD has captured a remarkable 40.16% of the CPU usage among Steam users, a near-historic high for the company. Conversely, Intel's share has dipped to 59.76%, marking one of its lowest points in the survey's 17-year history. This near 60-40 split in the gaming sector signifies a substantial closing of the gap between the two tech giants. While Intel continues to maintain an overall lead in the PC, mobile, and server markets, AMD's resurgence, especially in high-performance and value-driven segments, has undeniably reshaped the CPU landscape. If these trends continue, AMD is poised to further narrow the divide across multiple sectors, although Intel is still expected to retain its leadership position in the foreseeable future. The strategic importance of these market shifts cannot be overstated, as CPUs are the backbone of modern computing, influencing everything from personal devices to enterprise solutions. Delving into the desktop PC market specifically, AMD's unit share reached 32.2% in Q2 2025, with Intel holding a 67.8% share. This represents a roughly 2:1 ratio in Intel's favor, a significant shift from 2018 when Intel dominated with a 9:1 ratio. AMD's estimated revenue share was even more impressive, at around 39.3%, largely driven by robust sales of their premium Ryzen 9000 series chips. This indicates that AMD is not only increasing its unit sales, but also commanding higher prices for its products, a testament to their improving performance and market perception. In the mobile laptop CPU arena, AMD holds a smaller, though still significant, piece of the market, with approximately 20.6% unit share in Q2 2025. Its revenue share in this segment was around 21.5%, suggesting a similar pricing strategy to the desktop market. Even in these segments where Intel has traditionally held a stronger position, AMD is steadily gaining ground, challenging established dominance with competitive offerings. The most dramatic gains for AMD are evident in the server CPU market. As of June 2025, AMD has secured about 33% of this crucial sector, a massive leap from nearly zero share in 2017. Intel still leads with approximately 62% share, but AMD's rapid expansion highlights its success in developing processors that meet the demanding requirements of data centers and enterprise applications. This growth is particularly crucial as server workloads become increasingly complex and data-intensive. These shifts in market share are not merely statistical changes. They reflect a fundamental reevaluation of CPU performance, efficiency, and value by consumers and businesses alike. AMD's focus on delivering high-performance cores and innovative architectures, coupled with competitive pricing, has clearly resonated with the market. This ongoing competition benefits consumers by driving innovation and potentially leading to more affordable, powerful computing solutions across the board. While the CPU market is seeing intense competition, another major story is unfolding about the government's direct involvement in private enterprise. Prepare yourself as we examine the broader implications of this new model of state capitalism. Trump's corporate takeovers, a new model for American capitalism. Donald Trump has embarked on a series of unprecedented actions, directly intervening in the private sector and securing significant stakes in major U.S. corporations. A prime example is the 10% ownership stake the U.S. government now holds in Intel, a deal facilitated by approximately $9 billion in grants from the Biden-era CHIPS Act. This move, orchestrated during a White House meeting between Trump and Intel CEO Lip Bhutan, has drawn sharp criticism, with some labeling Trump a socialist for such actions, a stark contrast to the Republican Party's historical opposition to government bailouts. Trump's rationale for these interventions appears rooted in his long-standing belief that the U.S. government and its taxpayers are frequently ripped off by businesses and other nations. He advocates for a more direct and tangible return on government investments, moving beyond indirect economic benefits to explicit ownership and control. As his top economic advisor, Kevin Hassett, has indicated, this might be just the beginning, with the possibility of the government taking stakes in more U.S. firms, potentially requiring CEOs to sell chunks of their businesses to the government, even at the cost of diluting existing shareholders. This year has already seen a pattern of what some describe as rank corporate shakedowns. Trump approved the export of advanced microchips to China by NVIDIA, and AMD only after they agreed to cede 15% of their profits to the Treasury. Similarly, the sale of U.S. steel to a Japanese firm was contingent on the U.S. government receiving a golden share. While the Trump administration argues these tactics bolster U.S. industry and enhance competitiveness against China, critics warn that adopting Beijing's state-run capitalist model could import its inefficiencies and economic weaknesses, citing examples like empty industrial parks and struggling housing markets. The risks associated with this new model are multifaceted. Questions arise about accountability. If Intel were to announce layoffs, would Trump face blame? How would foreign chipmakers like Samsung, significant players in U.S. manufacturing, be treated in comparison to government stakeholding companies like Intel? The core concern is the lack of clear boundaries for this state capitalism, with critics like Nick Cataggio suggesting it reflects a desire for dominant authority in all spheres of American life, driven by a need to impose will and project strength, mirroring actions in other areas like the National Guard deployment in D.C. or pardons for Jan. 6 rioters. This approach fundamentally challenges the principles of free market capitalism that have long been considered a cornerstone of American economic success. The argument is that government intervention, especially ownership, can lead to prioritizing government goals over profit maximization, potentially stifling innovation that thrives on competition. The invisible hand of the market, as described by Adam Smith, is replaced by the very visible hand of Donald Trump, of the U.S. government. This departure from established economic norms raises concerns about long-term economic health, potential cronyism, and whether the U.S. is adopting a system proven to be less dynamic than its own. These significant shifts in both the tech market and government economic policy are creating major talking points. Get ready for a rapid-fire recap of all the top stories you need to know. And that's a wrap on another packed episode of Qualcomm Pulse. We saw incredible savings emerge on a key processor, explored the groundbreaking governmental stake in Intel and its implications for capitalism, analyzed the dramatic shifts in CPU market share favoring AMD, and questioned the broader implications of direct presidential intervention in the private sector. Don't miss out on future breakdowns. Hit that like button, subscribe to the channel, ring the notification bell, and share your thoughts in the comments below. You can also follow us on all our social channels for even more updates. See you next time.